Right, good morning. It's Graham Healy from Trade Canary, Australia, New Zealand. It is now Friday, the 8th of May, 2026. Now, I've decided to do a little short training video to explain some of the advancements we've got on Trade Canary software, and when I'm doing the analysing trades, this is all part of it, but there's been a further refinement, which, our members will be very pleased to hear about. Now, I'll just go straight onto the main website where we're running the competition where we give away a membership worth $1,500 once a month. And if anyone wants to encourage other people to come onto the new members Zoom, that's every Wednesday at 7 p.m. And our regular Zoom for our joined up members is on Thursday, every Thursday at 7 p.m. That's Brisbane time, Queensland time. Have a look on the website and you can link to the Zoom links from there. Now, because of this competition I'm running, and I'll probably continually run this because it's very, very good, I get a lot of three main questions that people ask about trading, and I'll just read them to you. One, there's too much information and it lacks a clear system to follow. This is people contacting us. Two, I trade, but I'm mostly guessing without a strategy. And then three, I'm a complete beginner and I don't know where to start. Now, I've analysed, as I do, I've analysed, the frequency of these various questions, and it basically comes down to this: is people are confused, and I was just talking to a guy the other day from Western Australia who's interested in Trade Canary. He's got real estate in the Philippines, and he works from Australia to the Philippines and backwards, forwards, and everything. And he wanted a business that he can take with him wherever he goes in the world, which is obviously, trading, stock market trading. Obviously, you can do that anywhere in the world, whether you be in the Philippines or Hong Kong or anywhere actually that's got an internet connection. So that's the beauty of it. Now, the number one thing that people have said to me when I talk to them is that they're basically confused. There's so much information out there, and there's so many what I call Ponzi schemes trying to rope people into the various trading systems or whatever, be it reading candles or whatever it is, And my answer to that is simply this. We don't focus on the hype, we read the data. So when you have a look at this is what I've also just put on our website, we base our decisions on data, not hype, not the fake news, not the financial report of whatever's going on this particular day, because it then can be the exact opposite the next particular day. And I've written here, are you confused and don't have a clear system to follow? That's 99% of people contacting me. Trade Canary education system can clear the confusion through our AI software. Now, admittedly, I'm doing all the filtering, but any one of our members can go down the same journey I have and, basically not purchase, but rent, I suppose, subscribe to the software at about 4.5 grand Australian. And then the renewals are about 1,300 per year after that. So you get that for about 18 months, no, year and a half. Yeah, that's 18 months, and then 1,300 after that. And then you've got to learn everything about what you're supposed to know and what to do and all the rest of it. So if you want to do that, you still can do that, obviously. But I'm doing that for our members. So the update, I just want to explain, and I'll do this next Thursday as well. I'll make this video quick, is... Now, you see this green bar when I'm posting the unusual options activity page. You'll see that Eric Huberman, the CEO of Trade Canary, has now put what I call the ultimate filtering system for trades. Now, You can see here, this is a TSCO, and it was just first on the list. I haven't picked this out, but now I've looked at it, I will examine it further later today, and you'll probably see it posted on our trade list on the chat. It is a tractor supply company, consumer cyclical. So, it'd be supplying the farming community, obviously. Anyway, I won't go into the company side of it. What I want you to see is what we're actually doing when we're actually, as we said here, our decisions are based on data, not hype. Right? Our decisions are based on data, not hype. Right, but let's go back to where I was before. Now, when I click this, this has got a rating of 82% basically out of 100. So when I click it, it comes up with the delta score, which is 25. The implied volatility score, 15.9. The DTE score, date to expiry, 13. The relative strength index score, 20. 52-week score, it's got nothing in there. Change score, 3.9. Liquidity score, 5.0. And that, when you add all that up, it equals, now I'm not going to go into the details of that because just I don't want to overcomplicate things, but the details of what we're filtering through the data to get to this conclusion is all done for us through the system. So if I see a trade that's got this green bar at the top and it's got 82.9 or 82.8 out of 100, there's an 82% chance that this is high, very high probability trade. And as you can see there, it's a call of 35, and it's a very cost-effective, cheap, in other words, cheap option. $205 is about the right average. The return back on that, if you get to 35, is $339. So, that's not quite 2-to-1, but when we have a look at this on the option chain with this green bar, you'll find that the delta is fairly high. Like, it's got delta here, I think where we are, IV score, delta score is 25. So, I'll have to have a look on the options chain directly on the trade workstation and see how that relates to the actual delta that it is now today. So a lot of these trades that get this green bar, this delta is very close to where the trade sits now. I haven't even looked at this yet. So let's just have a quick look and have a look at TSCO on our, for instance, we'll have a look at that on Yahoo, as I would normally. So I'm going to have a look at TSCO, and we'll just have a look and just cross-check that filtered reference, right? So let's have a quick look at it. Okay, so we'll just go to 1 year of Tractor Supply Company. Now, the reason why it came up as a green bar is that it's sitting at a 12-month low, 31.70, and it's got up to 62.57 over the last 12 months. So this trade can easily double in value if the contract is out long enough. And I think from memory, that contract was sitting on about the 19th of September this year. So September, where are we at? May, June, July, August, September. That's a clear 5 months. And then if we look at the 5-year plan, see, this is actually a 5-year low. Great. In a prime position to make money. So when these companies are at 5-year lows, 12-month lows, this is a prime position for us to take an option. And then if we take the option close to, like, if the delta is close to what I call par. In other words, let's have a look at the company before I get carried away there. Let's just pick one of these up here. This is on trade view. I don't want to, Adobe's doing quite well, but I'm not looking at that at the moment. I'm going to change. Oh no, we'll go to here. One that Campbell Soup, that's doing very well too. Another one of the consumer defences. Now, what was it again? TSCO, I think it was from memory. I hope I got that right. Tractor Supply Company. Right, there it is there. Now, this is on the blue line, red line. Now, the earnings is coming up shortly. Its earnings here, obviously, was a bit of a drop. Bit of a drop there. Bit of a plus there. Anyway, a bit of up and down. But the bottom line is that its value now is 31.74. So one share in the tractor company. And when we look at the tractor company, and again, I haven't even looked at this before I come on the video. The tractor company engages in retail sales of farm and ranch products. It operates retail farm and ranch stores and focuses on supply of lifestyle needs for recreational farmers and ranchers, and as well as tradesmen and small businesses. It operates a small retail stores under names like Tractor Supply Company, what's that, Orshellen Farm and Home, various other names, and is headquartered in Brentwood, TN, wherever that is. Where's TN in the US? TN USA, might be Tennessee. Tennessee, yes it is. So the good old Tennessee, right? Okay, so that's the company. It's worth 16, is that billion, 16 billion market cap, so reasonably large company. Got 52,000 employees, so that one's looking good. So the bottom line is that just remember this share price, $31.74 per share, right? So it's really this is like, you couldn't get much lower than 15, I think, that 12 or 13 on the RSI scale. And all we need for it to, say, come up to here, it's on its lowest point in 5 years. Can only go up from there. So when we have a look at, we go back to trade Canary analysis, the call is 35. So when I go back and look at the 35, see, the actual share price at the moment is 31.74. So that's sitting there at 31.74, sitting down here. We have called a trade at 35, just there, right? So if we call the trade at 31, it would be sitting right in the money, and 34.75 is what we've looked at here. This just came up, 35, sorry. So if we're sitting at 35, now we have a look at 35 again. 35 on the Yahoo 5-year chart, no, 5-year chart. I'll make it the 1-year chart. So 35 just sitting here. So it's like, for us to get to 35, it's a very high probability, considering in the last 12 months it's actually doubled that and got to 62. So sitting at 30, yeah, we're taking a trade out at 35. Now, I think from looking at this analysis, when this is all added up electronically with our artificial intelligence working behind the scenes in Trade Canary, the overall score is 82.8 out of 100. So this is a high probability trade, and you won't see much differential here at the moment. Usually I look for the 2-to-1, but in this case it is, well, let's work it out, just to be exact. So I'm going to take 325 or 339, sorry, we've got 339, and divide it by $205, and I'm going to get 1.65 is to 1. So the return is 1.65 1.65 to 1. It's not the 2 to 1 that I normally look at, but it is a 5-year low. So the chances, obviously, this will never go green like this unless the probabilities are extremely high. And as it said here, a TSCO needs to move up 9.3% before expiring. Based on the current delta, this option will be worth $339.47 when in the money, which is plus 65%. What that means simply is, when we get back to here, let's go back to the chart. Right, all that means is it's sitting right down here. Our target is 35, which is just here. So that means to go from the lowest ebb in 5 years up, just to sneeze up to here, to 35, it'll be worth the 300 and whatever I said, 330 something dollars, 1.65 by the original investment. Now, the probability of this going much higher is quite high because the data's reading that as green on the screen. So, for this to go from here to here, or even to here, would be a high probability. So once we reach 35, as we go from 35 through to, let's say, 40, the option increases dollar for dollar. So once they reach that target, and the name of the game is getting at the lowest point possible, and, if we can, getting close to in the money. This is out of the money slightly, but it's just a cough, just a sneeze and a cough, and it'll be in the money at 35, what we've called that target. And once it goes beyond that, well, we'll make money at 35, but if we go to 40, we're going to double or triple or 3x that investment. So that's how it works. So getting back to, and I won't go on long with this, I just wanted to make a short video. So this is the new filter that we've got on Trade Canary, which when I'm looking at something, if I go onto Trade Canary again, I'll just show you. Let me bring Trade Canary up, the software, and I'll just show you directly how I saw that trade. And we just simply go on unusual options activity, and this automatically will bring up trades which have got the enabled strategy. Now, the enabled strategy is exactly what I've just spoken about. And then it says liquid contracts. In other words, money's flowing into these particular trades. So 133 days divided by 3, it's about 4 months. And when I click this, you'll see that it's given the score. So that behind the scenes, the algorithm is working out a positive score for this particular trade, a call of 35, only $205. And the return on that, and this is the low, this is what you call, when we do these on Trade Canary, they're the lowest point. In other words, they're not exaggerated, they're very minimal. So we're looking at 339, which was about a rating of a ratio of investment to return of 1.65. But the big thing is that to get to 35 doesn't take much, because, where are we? We'll get back to here. No, not that one. Sorry about that. No, not that one. We want to get to this one. To go from where it is down, sitting there about 31.74, 31 there, to get to 35, that's where 35 is. 35, let's just draw that in. 35, I'll correct it later, but we'll get as close as we can. There, about there. So that's 35. Now, all we've got to go is to there in 4 months. What's the chances of getting there? Pretty high. So once we go beyond there, let's say another 10, clone that to say 40. Once we get to here, it'll just run from dollar to dollar. So every dollar increase, we make $1. So, whatever is invested, if, will exponentially grow bigger once it hits 40. And then with this trade, we could do from 40 to 60 and keep going, because when you look at Yeah, where are we? Here we go. When we look at the 12-month price history, this has got a lot of room to move. So 35 would just be one level. Remember, this is a 5-year. This is 1 year low, but it's a 5-year low. To get to 35 will just be a sneeze away. To get to 40, well, obviously there'll be a gap there somewhere. To get to 40, won't be far away from that at all. So we could do sort of a roll, and this has got the potential to go up to 60 or more, but 60. So I hope that helps. That's just a quick one. So as a preliminary for explaining this at the next Zoom on Thursday. So that's how we're going. And Eric's working on refining this all the time. So when I'm looking at trades for our group, I will go through these, and as you can see here, that's one I've already posted, and I will look at these and see if they're good value for money. So this is about 2 to 1 with the Boston Scientific Corp, or it's actually these ones make pacemakers and all this sort of stuff. Quite a credible one. I've written a whole lot more on this one, but I'm not going into it in this video. We're probably Nike. Remember, I've got 12 contracts on Nike. Nike appears here continuously. It's set to make money. So, as you see here, the purchase price, 310 US, just about equal to the return, but you're looking at almost 80%, what you call the call buyer score of 80%. So the probabilities are right up high. The delta score gets 25. Now, when I look at the delta, I haven't got my trade workstation open, but you'll probably find the delta is in the money. So when these are equal, it'll be in the money. So just a quick one, I'll finish off on this. We're just looking at Nike. The call's 45. This is sort of be an in the money call. And I think I've got Nike here sitting somewhere. Have a look at Nike. Yep, there's Nike. So what did I say again? Went back there. Nike, the call was 45 and it was basically in the money. And I'll go back to Nike. No, that's not Nike. Here it is here. Okay, 45. Okay. So just imagine the value of the share is now 44.41 or 44 for round figures. And the call we made, it's 45 here, right? So we've already got a trade at 50. I've got 12 contracts on that trade. But this particular one that's been displayed by the system is in the money. This will be in the money right now or just above, probably about at the money, right? In other words, 45 is close to 44. So it'll be sitting at about a delta probably of 50 or something like that, halfway, 45, somewhere around there. So if we get that trade I just looked at on the unusual options activity, new filters, you can imagine, okay, we buy that, it's going to be worth, what did it say back there, about 300 US, and it'll give you 300 US sitting at this value now. I mean, 1 point below where it is now. So all it's got to do is move up to here, 47.5, and we're already in the money as soon as we move 1 point higher. So that's the logic in it. And you can see here with Nike that there's a gap to fill here. I've had a look at that on the truth chart. And you'll see that these are Heckenarchy candles which average out. But when you have a look at the truth chart, these are just a big gaps there. So you'll see that, I'll see if I can bring that up. No, I didn't. I'll do a truth chart here and just show you what I'm talking about. And we'll change that to Nike. All right, you see the gap? That was the same trade I was looking at with the momentum chart. And this is just, got to change that a little bit. Nike started to move. So see this gap? Here we are here. So, these candles just show you the true value of buying and selling. So if it's a red candle, the seller's won that day. If it's a green candle, the buyers won that day. In this situation, you see there were buyers, and suddenly, straight after earnings, I might add, and earnings was positive. So, it can be a binary event. Boom, she dropped down to here. Right. There would have been other circumstances that we don't know about at the moment, but it dropped, formed a gap. And the rule of thumb is this: 90% of the time, all trades fill the gap. And certainly this is a classic example. And when I aimed at 50, that was simply filling the gap 3/4 of the way. And we've still got to the 17th of July for this one to come into fruition. And when I have a look at the on my trade workstation, as I say, I've got 12 contracts, and they're worth, at the moment, I think they're worth about they're up to about 3 grand. I expect this hits 50 and possibly beyond to fill that gap a little bit higher. That could be 5 grand back into the account, cost me maybe half that, right? So that's how it works. Okay, hope that explains that briefly. We are in the background advancing Trade Canary like you wouldn't believe. That is why the number one question people say to me every time I'm talking to them on the phone is, mind you, we're saying we base our decisions on data, not hype. And what most people say to me, they're confused. They don't have a clear system to follow, but we do. Most people are trying to do trades by emotion. We're doing it by data. We don't care what the outside world, like I say, we're in the matrix, right? So we've got this massive interfacing the 11,800 plus companies in the US, reading all the data, billions of data points, and then filtering it right down to these executive summaries. And that's how we're doing our trades. So we don't care what other people are thinking, because, like I've said before, I've done all those courses. And if you want to go out there reading charts and guessing, good luck, because that's not going to work these days. So we're not doing that. We are reading data. We are making our decisions on reading data. So, and we're using, a software that can read. I mean, I forget what Eric told me about how much it actually costs them they have to buy the data. So for them to run the software is fairly substantial. It's a big investment for them to have the actual data directly downloaded off, the stock exchange to them. And then, of course, they've got the interface software, i.e. Trade Canary, to read them. Now, on the surface level, anyone asks you, we're doing software education. We're not licensed traders. We're not giving you financial advice and all the rest of it. We just say we've got a software that is actually taking the confusion out of the stock market and just boiling it down to readable data. That's what it's all about. Okay, that's Graham over and out. Hope that helps. See you next Thursday. And, if you have any referral members, steer them into Wednesday night, because I want to leave Thursday night dedicated to our members, just for trade analysis and all the rest of it, and updates like this. Okay, have a great, what's the day, Friday? Have a great weekend coming up. Graham Healy over and out.